Good morning, troopers. Screen share should be active. That should be coming through. Hopefully sound is coming through as well. If you're receiving one and not receiving the other, you're going to be in a lot of trouble. If someone tap your keyboard, just let me know everything's all good. Alright. So, welcome guys. It's Monday the 17th of March 2014 already. A lot happening on the economic calendar this week. Certainly in terms of the number of items listed, although maybe not all as relevant or equal as each other. Lots of speaking engagements. We've got Bank of Canada Governor Paulos speaking today. We've got the ex-Bank of Canada Governor Carney, who's now the Governor of the Bank of England, speaking today as well. Later in the week, you've got Bank of Japan's Kuroda and as well SMB's Jordan. So lots of speaking engagements there. But I think the highlight of the week will come in the middle on Wednesday. A lot of data releases out of the UK on that day, and as well later on from the US. As far as the UK is concerned, we've got the voting pattern of the Bank of England's Monetary Policy Committee. So we're going to find out the voting pattern for holding interest rates and as well for the asset purchase facility, which is the UK equivalent of the quantitative easing program. Also out of the UK, we're going to have the latest claimant count numbers and as well the unemployment rate. So again, widely eyed figures, closely eyed figures from market participants, looking to see whether the Bank of England will accelerate towards raising interest rates. Certainly the indications from Governor Carney from a couple of weeks ago when he was in front of the Treasury Select Committee was that they're going to do things in a different way to the Fed, right? So the Fed has already started reducing its QE program, and what Governor Carney was expressing was the notion that here in the UK, interest rates are likely to rise first, and the QE program is, or the asset purchase facility program is likely to be pulled back at a later date once interest rates have already been raised or have already been increased. So some quite interesting statements there. Also on Wednesday, we've got the FOMC, right? So it's the FOMC statement. It's also the FOMC projections for the US economy. And as well, Janet Yellen will be giving her first FOMC press conference, right? So lots to look forward there. FOMC not always a volatile event, right? When you have the release of the FOMC statement, it's not always a volatile event, but nevertheless, it does have the propensity to do that. Recently, it does sound as though every statement which comes from the Bank of England or from the Fed, everything sounds like a slip of the tongue, because in the in the pronounced agenda of giving forward guidance, what they're finding is that the market tends to give a sharp reaction, and then they have to change the meaning of what they were expressing, or actually what we meant to say was this, or what we meant to say was that. So all of that has the propensity to cause volatility. I think Wednesday is going to be the key day to be watching the markets. On Thursday, we have the S&P LIBOR rate, right? So no one's really expecting any kind of significant change there. Friday's a bank holiday in Japan, so expect a light Asian session overnight there, Thursday night, headed into Friday morning. All right, let's turn our attention towards the charts. Plenty of technicals to be looking at. We're seeing some nice structure developing on several pairs, on any number of pairs. I'm going to start off this morning by taking a look at Euro USD. One of the things which I dislike about a lot of analysis is the ability of analysts to sit on a fence and not to actually pronounce a verdict, right? And I found myself in that trap a few times as well, right? So, it could go up or it could go down. And so, you come back a week later and say, see, I was right. It did go up. Or you come back and say, see, I was right. It did go down. So one of the things which I try to be careful about is to always express a bias, right or wrong, to have a bias for the default position. So if I was doing anything, I would be buying. It doesn't mean that I am buying, but to say, if I was doing anything, I would be buying, rather than to be saying, oh, look, here's my arbitrary level, and we're up from here, or we're going to be, and if we're going down from here, we're going to be reaching here, and you come back a week later and the price is down here. Someone says, see, I told you so. I told you it was going to be going down. So I'd rather have a bias and commit to a bias and say, if I was doing anything, I would be buying. If I was doing anything, I would be selling. And if I'm buying, then this is a price level at which I consider myself to be wrong. If I'm selling, this is a price level at which I consider myself to be wrong. And, it's a trader's way of thinking. It's actually thinking like a trader. Right? When you trade, you think, if it's going up, it's going to here, and it's going down, it's going to here. You have to think, well, if I was doing anything right now, I would be buying. If I was doing anything right now, I would be selling. And you can use that in opposite, where if I was doing anything right now, I'd be buying. So where would I be wrong for buying? Well, I'd be wrong at this level here. So actually what I want to do is sell. I'll wait for the price to drop to that level. It means the buyers are wrong, and therefore I'll start selling, right? So just a little bit of a structured way of thinking. And sometimes you get price structures on charts which make that way of thinking easier, right? It's not always easy thinking like that. It's one of the reasons why analysts tend to fall into that type of trap. But sometimes you have structured price movement on a chart, structured technical movements, and it makes it easy. It makes it a little bit easier to start thinking like that. So I'm going to start this morning by looking at Euro USD. And what I'm saying about Euro USD is that at the moment, as it stands, if I was doing anything, I would be buying. All right. So what are the reasons to be a buyer or to have that default long position on the Euro USD? First off, we've been seeing a pronounced bullish momentum on this particular instrument. That's the first reason. It does look as though she's moving inside of a channel, right? And I think I did draw this channel the last time I was here as well, right? But she's moving inside of a channel. And what I'm seeing on this chart, I'm on a H4 time frame here, but what I'm looking at here is that we have support which has been established at the 3830 area. So there's your breakout north. Here's your yearly open level that's coming in, 3770-ish or something like that, right? So the direction of the yearly candle is bullish right now. And we've seen breakouts north on this instrument, and we're seeing support which has been established at 3830. So what I'm saying is, so long as the price holds above 3830, my default position on Euro USD is to be a buyer, right? That's what I would be doing with this instrument. If it happens that the price collapses below 3830, if you have a short bias for whatever reason on this, and it does look as though she's starting to struggle a little bit, you can connect the most recent highs on the instrument, and you can see where the Euro USD was rejected from last. Okay, so she's starting to struggle. And if you wanted to be selling the instrument, then it would not be unreasonable if the price moves to the underside of that resistance wall to be looking to sell the instrument right there. It wouldn't be an unreasonable idea. It's not something which is beyond comprehension and someone would call you crazy for doing it, right? So we're seeing signs of struggle there. And if you've got this idea that Euro USD is going to collapse, then maybe you'd want to wait for a breach of that support, right? Maybe you want to wait for the price to break that support. Maybe you want to wait for the price to be back below 37.70 so that the direction of the year changes into a bearish direction. So that you can kind of say, you know what, forget the technicals from the kind of psychological aspect. If the price is below the yearly open, I'm saying psychological. The sentiment aspect, if the price is below that yearly open, then she's more likely to head further in that direction. Right? So, there may be a notion that the Euro USD is going to pop out here, or is going to pop out sub 40, but that would only be proven once the support is breached. For now, what we continue to see is momentum to the upside, so long as the price remains critically above that 38.30 area. A break below that, and that could become a confirmation for the bears, right? So your default position is north, and your reversal position is to look for a breach of that support structure. Once the support structure has been breached, then you're good to be pushing the trigger south on this particular instrument. Okay, next up, USD JPY. USD JPY is has been one of those crazy pairs. We've not seen as much strength in USD JPY as we've seen in her sister crosses, right? So all of last year, this was a yen story. We saw weakness in the yen. We saw that on USD JPY. We also saw it on GBP JPY. Very strong bullish momentum on GBP JPY. We also saw it on the euro yen. All right, we also saw it on the euro yen. Pretty much across the board, it was a yen story. But considering the move that we've seen over the course of the last few weeks, we've seen a propensity on euro JPY and GBP JPY to break north, but USD JPY, actually, she's been in this range. She's been in this range now for 7 weeks, right? This is week 8 inside the range, week 8 inside the block. And whilst I'm not discounting the propensity for the instrument to break down a little bit further, and I wouldn't necessarily be surprised if it did. I wouldn't be surprised if it broke down a little bit further. But at this stage, I think you have to caution a little bit. You have to caution a little bit. Do you really want to be buying and selling inside of that range? One of the troubles which I have with range strategies is that usually it takes 7 or 8 weeks to realize that actually there is a range, right? So it would have been pretty difficult before last week to recognize that there's a range here, right? So you would have recognized the range, something like that. I don't know, where you would have marked the low of that range, but it takes time to recognize that there's a range which is, or that the price has been ranging. And the issue that I have with that is that usually by the time you're able to recognize that an instrument has been ranging, she's about ready to break. 7 or 8 weeks in the same price range is a long time for any instrument, right? So just watch that. Don't be thinking she's at the bottom of the range, let me start buying. She's at the top of the range, let me start selling. Be looking for that breakout regardless of the direction that she chooses to break in. Okay? I want to mention one more thing about this instrument. It's just kind of minor thing. It's just a technical analysis just on the pair itself without necessarily committing to any direction at all. So I'm still not doing that classic kind of analyst thing. So, well, she's going down, she's going here. I think she's going up here. I'm not committing to either. All right? What I'm saying is that if she breaks, there's potential to chase the break there. Don't necessarily be trying to confine this instrument to the range. Usually by the time you recognize that there's a range there, she's ready to break, right? That's a general kind of rule of thumb when you're looking at ranges. So chase the break, okay? Overall, the instrument does remain in an uptrend. It does, we can't discount the bullish momentum of the last 2 years. We haven't had a high, a low, a lower high, and a lower low, right? We haven't had an overarching structural change on the instrument. So we're still looking at higher highs. And my suspicion on this instrument is that at some point this year, she will go back and hit the 105, if not breach the 105 from a psychological aspect, not the sentiment aspect this time, but from a psychological aspect. I'd be looking at this cluster, which is at the 100 level, just below the 100 level, which is the key level, key figure, and I'd be looking for that to hold the price. And if it happens that the price carries on breaking below, fair enough. But if you see breaks or holds above that 100, maybe worth starting to build a small and insignificant long position with a view that if she does start heading back towards the 105, that is something that you'd be able to build upon. Right? So USD JPY, just some caution because of the nature and the time over which this range has expanded on the instrument. Okay, cable, right? GBP USD. Bit of a tricky play, this one. But let's just zoom out first off. So we'll start from the beginning on this one. Our analysis on the GBP USD, it really started with the resistance wall. All right, so here's our resistance wall on GBP USD, and on several occasions we've seen reactions on the underside of this wall. All right, so there's the resistance wall, and you know what? Every time she's reached the underside of that wall, she's given a sharp and fairly strong reaction to the underside of that wall. Now, what that has me believing is that that particular wall is tapped out, and so if it happens that the price rushes back north, the next time she reaches the underside of that wall, I'm kind of thinking the wall won't hold it. So she'll go and hit the wall, she might bounce back a little bit, and then she'll go and break through it. It's been a resistance wall, so once that happens, then on a pullback, that same wall will start giving support, and that will become support for the next leg north on GBP USD. Right? So that is indeed if, in fact, she does rush north and she goes and hits the underside of that wall. Often when you have that kind of suspicion, it's not unusual for the price then to go and hit the underside of that wall. You're looking at the wall. Quite often you're looking at it and you're thinking, if the price goes there, it'd be a good place to sell it from. And, you spend 2 weeks thinking that, watching the price climb to that level, right? And then you go and sell the underside of it. This time I'm thinking, wouldn't it be interesting if the price went up there and breached it? So why not to actually chase that move up to that wall at least, if not through it, right? That's the kind of thinking which I've got going on here. And the reason that it's interesting right now is because she is being very cleanly supported off of the yearly open price. That yearly open is coming in at 65.60, 65.70, around there. Very strong support at that level. So any kind of move towards that level, then, and in fact, I've marked a couple of walls here, and I'm interested at the walls. Okay, so any kind of move, she's not very far from that, but between, I guess, the 66 area and that yearly open at 65.70, it's worth taking on just a little position, right? You just want to know that that's going to hold, and your stop is going to be possibly around about the 65.30 area, all right? So you're going to give it a little bit of room to breathe if she wants to bounce around that yearly open. But we're going to look for that yearly price to act as support, and then a move north on this instrument. If it happens that we start making it through our wall, then you just start adding small casual longs, looking for the price to extend towards the 170 handle. All right, so GBP USD, default long position. What qualifies it, what validates that, is just the yearly open. All right, she's been supported at that price. So we expect for that price area to hold it. If she remains above the yearly open, then we have 9 months left this year to expect for that bullish momentum to grow. So this might just be the beginning of something. You don't have to look at it as the end of the bullish momentum that we saw develop over the course of last year. It may be the beginning of a bullish momentum that we're going to see on GBP USD. And if she breaks down below that yearly open, right, then that bullish analysis is invalidated. There is a tentative support at 63.30, 63.40, but if she's below the yearly open price, then the yearly candle has taken on a bearish direction. It reflects bearish sentiment in the market, and at that point we'll start looking and saying, okay, where's the resistance, and where ought we to be selling this particular instrument, rather than asking where should we be buying this particular instrument from, right? So she's near enough that yearly open. It is worth taking on some positions long on the instrument, looking for some upside. It may not develop with a great deal of momentum. It doesn't have to. Remember, there are a lot of event risks this week, right? So, we've got the Bank of England minutes which are going to be released. We've got claimant count and unemployment rate in the UK. If you're looking at the past few months, they've led to a lot of volatility on cable crosses, right? So keep your eyes on that over the course of this week. But if you're seeing the momentum break north, if you don't want to load up on the dip, just wait for the momentum break north. Strong bullish day, chase it, right? That's all you've got to do with the instrument. So, but definitely worth keeping on the radar. But below the yearly open, it just invalidates it. It would just mean that the idea is plain wrong, and at that point, we can look to kind of switch bias on this particular instrument. I know some of you are going to have this marked as well. All right, still worth keeping an eye on. Just in case she does a kind of, one of those, right, with a false breakdown, and then trapping the shorts before breaking north. All right, that's GBP USD covered. What else do we want to? We're looking at a lot of cable crosses this morning, actually. Pound Canadian. Okie dokie. All right, so this is the Pound Canadian. Pound Canadian, again, it's a favorite of ours. We've been looking at this for quite a while here on this forum and in the trade notes that I publish every week. On the Pound Canadian, we have a broadening structure, and I have a suspicion that the price is going to break back inside of this broadening structure. All right, that's a suspicion. It's a suspicion that I have because I would have expected that if she was going to rally north, that would have happened by now. All right, so it's just a suspicion, and it's to do with the timing, and it's the kind of thing, she was supposed to break north. Why hasn't she done it, for God's sake? All right, it just doesn't seem to be happening. So if she's not breaking north, is she going to break back inside the broadening structure? The reason it's important is because from where she's at right now, you're either looking to, you're either looking at 1,000 pips to the upside or you're looking at 1,000 pips to the downside, right? That's what you're looking at from where she's at right now. So I'm thinking she's going to break back inside the broadening structure. If she breaks back inside the broadening structure, you just want a significant breakdown. You can start selling the rallies, looking for that same wall to hold, and then eventually the price to start breaking down. And if she breaks down, she's certainly going to head into the 70s and 75, 76. That's where the yearly open was. Look, you just back to the yearly open, you're talking 700-800 pips, and ordinarily with a broadening structure, the play is from the upper wall to the lower wall. That lower wall is in the 60s. All right. That's what makes this so interesting. That's what makes it so interesting. So keep this one on the radar. From a technical perspective, as long as she's above the wall, then your default position would be a long, right? But because she has failed to break, I am becoming very, very interested in a short play on this instrument once the price is broken back down into that broadening structure. If you're a little bit more aggressive than that, you might choose to say, you know what, let me play the short here. Okay, let me play it against resistance at 85. All right, and 85 invalidates my short and get in early before she breaks down. But it would be really an aggressive play, considering that the default sentiment above the wall actually is a bullish sentiment. What it means is that we have no confirmation for the short at this stage. But if she breaks back down below the wall, that is my suspicion, then at that point, I think it would be wise to start selling rallies, looking for further extensions to the downside. Okay? For the time being, she's above the wall. The default sentiment remains a long, although I'm finding it difficult to position long on the instrument. Not seeing that momentum break, right? Not seeing northerly momentum break. It's making it very, very difficult to position north on this instrument. I guess what I'm saying is, look, I think she's going to break down. I think she's going to break down. Just watch out for that if it happens. I think it will be an easy one to chase on the underside of that broadening structure. Euro-Canadian, similar story, right? So, from a few weeks back, we constructed a channel here on the Euro-Canadian, right? That's the Euro-Canadian channel. And when we were looking at this channel, the price was here somewhere. And what we said is that we think the price is going to break north and pull back, and she's going to head towards the upper wall of the channel. So there's the upper wall there. It's a predictive channel, right? We just used a harmonic in order to make some measurements, and we constructed our channel in that way. But it does look as though she's starting to face some resistance now up at the 55 handle, and maybe what we need to do is to remove the channel. Okay, maybe what we need to do is to remove the channel and start looking at a different construct on this, right? So first off, try and join it as simply as I can. Okay, we have a broadening structure. Okay, there's our we have a broadening structure on the Euro-Canadian, right? There's a broadening structure there. So this is the first thing to consider, and you've got to consider it because, look at the sharp reaction there. Just look at that sharp reaction, right? So from a technical perspective, so long as she's below that wall, it's a default short, right? Ordinarily in a broadening structure, you would expect the price to move from the upper wall to the lower wall. If you really want to be a visionary about this, you'd be saying, well, the price is 153 now. Come back in a couple of months' time. It's going to be at 137. All right. I know. It sounds crazy, right? But it's a broadening structure, and ordinarily that is what you would expect in a broadening structure. You'd say, well, the price is going to move from the upper wall to the lower wall of the structure's default short, right? And we actually attempted short this last week, and I went way too tight than I should have. We went in at 54.80 and we were stopped at 55, using 20 pips on that. But on the underside of that wall, it's a short. Okay, even if she pushes again to the upside, underside of that wall short. I think you have to have that wall marked on your chart. I don't think it's something that can be ignored, considering the clean reactions that we've had on the underside. All right, so you kind of can't ignore that. Right, what else are we looking at? So that's one. I'm going to drop the time frame here. The other area which we want to keep an eye on is the 149 price handle, right? So I may have mentioned this area to you guys before. It's a support resistance area. All right, so you've got resistance, you've got support. What was interesting about this support resistance area is that, the price broke, but it was tapped out on multiple occasions. Okay, at 149. So my suspicion, and again, it's a suspicion until it happens sometimes, right? But if this price is going to break down to the 149, I suspect that the 149 is not going to hold. And if it does hold, it's not going to hold for very long. So you might get a rally off of it. And if you get a rally off of it, you can sell that rally at any price you like with an expectation that the price will reverse and break down below it. All right, so what I'm saying with the Euro Canadian is very similar to what I'm saying with the Pound Canadian, which is, you know what? The Pound Canadian, why didn't it break north? Why hasn't it done it? And so we think that she's going to fall back inside the broadening structure. And we think she's going to make a move to the downside. Euro Canadian, just using the broadening structure, we think she's going to break to the downside. And there's something about this 149 handle which says it would not be unusual for this area to be visited again. One of those is that there are probably a lot of retailers looking at 149 thinking, oh, look, that was cool. Look how many times it bounced from there. I'm going to buy when the price reaches 149. And if there's people who are thinking that I'm going to buy when the price reaches 149, then don't be surprised if the price does reach 149. And then don't be surprised if the price consolidates and then breaches 149. All right. So there are a lot of factors which have me believing that the price will be back at this 149 handle soon. Yeah. So I'm going to look to start positioning myself short on this instrument at some point where I can get some kind of technically risk-defined entry. But it is something which is worth considering. And if you don't catch it before she reaches 149, if you don't think you can get risk definition before that, then I think if she bounces off of that area, that will give you plenty of room to be selling into, looking for eventually a breach of that price handle. What else are we looking at this morning? Okay, some immediate stuff, right? Euro GBP and the pound Swissy. So this is the Euro GBP. Euro GBP on a near-term basis, we have a resistance cluster which extends down towards the 83.30 price handle. There's your resistance cluster there. Okay, it's resistance, and the price broke up above it, and it's pulled back, and this cluster has turned support. So our expectation is that we're buying the Euro GBP. Okay, I'm buying Euro GBP, and my expectation is that so long as the price remains above 83.30, then I'm going to consider bullish sentiment to be intact on Euro GBP, and my default position on this instrument is long. If it happens that the price breaks down below the 83.30 price handle, the longs will be invalidated at that point, and that would have me sitting aside on this particular instrument, right? So if you're looking for something in the near term and you're looking for something that you can trade pretty much immediately, then I think you ought to be getting involved in long positions on Euro GBP. It's a very straightforward SR play. There's our resistance. We're looking for this block to act as support and for the price to break to the upside. If she's able to make it through 84, then there's no reason why she can't make 450. And if she makes 450, there's no reason she can't make 85. So I think good risk-defined entry with reasonable push to the upside to be played for on this instrument. There's also her sister pair, the Pound Swissy. Pound Swissy, we have a SR block a little bit higher up. So from a structural point of view, this was the support here. And again, it's a support cluster. I've got that boxed off. So the expectation would be that if the price came back up to this level, it would act as resistance. Not really. Here we go. It would act as resistance, and we would expect the price to break down from that level. That block is coming in around the 46 area. The upper end of that block is around about 46.20. Lower end is, I think, 45.90ish, somewhere around. You can measure the block yourself, but it's very well defined, right? It's just there. Support resistance block. Now, from a technical perspective, default position, so long as the price remains below that 46 handle, is to look to the downside. Okay, that's going to be a default position, even if she rallies up towards that spot. She may turn sooner than that. There's an intermediate resistance here. We can see some kind of hooking going on. All right, so maybe she reacts sooner than that. Maybe she reacts at 46.70-ish. That's not really confirmed yet, but maybe she reacts sooner than that. One of the things to note about the Pound Swissy and Euro GBP is that they are inversely correlated. All right, so if Euro GBP is going up, then Pound Swissy is going down. All right, just note that exposure to one is the same as exposure to the other. So I've chosen to actively trade Euro GBP because it's a little bit more black and white, but it's not necessarily more black and white, but from a risk definition point of view, it's black and white, right? So if we're looking at Euro GBP, we're saying, what we're saying is, well, you know what? Here's our cluster, all right? And she's right at that cluster. If I'm right, I'm right. If I'm wrong, she'll break down below and it will invalidate my bias very, very quickly. With the Pound Swissy, I'm saying I've got bias from this block, but you know what? We're still kind of 60 pips to prove me wrong on that. It's a little bit more than I like, right? So it's the same trade, but the Euro GBP, it will give you right and wrong quite quickly. The Pound Swissy, you know, it's still 60 pips to your kind of ideal entry level, although anywhere below that level, technically, it's a short play, all right? So if you get a trigger, if you see the day breaking down, or you get you get a bearish H4 bar or something like that, you might choose to chase it and look for a little bit better risk definition. But I think the Euro GBP is giving that right now. The Pound Swissy, it's still got a way to move to your ideal kind of entry level. Nevertheless, it's worth keeping on the radar. You know, if she breaks down, she will give more pips, right? That's just the nature of the range of the Pound Swissy in comparison to the Euro GBP. But on the Euro GBP, you're getting better risk definition. So I think that's a decision I will leave you guys to make. Okay, folks, that's your lot, really. That's everything that I wanted to cover this morning. Thanks very much for attending, and I'll be back here in 2 weeks' time. Thanks as well to the team at FX Street for providing the platform. If you like what you've heard and you want to hear a little bit more, then you are more than welcome to register at my website and check out the analysis that I publish there. So I'll see you all in a couple of weeks' time. Cheers, fellas. Bye.